Good morning, everybody. I can see that people are joining us, but the numbers have sort of gone static for a bit. So I'm thinking that might be it for the moment. But welcome on a rather, yet again, grey looking day, but the sun did shine yesterday. Always gives us a bit of hope. Right, this morning we're doing our webinar on finance for SMEs, ready to take control of your financial future. The majority of our members are micro businesses, so we thought a webinar on finance specifically for you would be helpful. Since the election, the PM and the Chancellor and most of the government have been sort of laying on the line about how badly we're all doing as a country. Wednesday's announcement regarding some large infrastructure projects came as a bit of a welcome boost. But it is down to us, the small businesses, to trade our way out of the current situation the best we can. And I hope that today's webinar will help with that, with the presentations from our speakers. The webinar will be recorded and will be on our YouTube channel, hopefully by tomorrow. So I think without further ado, we'll make a start. The first speaker is Mike Bennetts from Better Bookkeeping Solutions, and he'll be talking from startup to scale up, tackling accounting challenges for SME growth. Mike, please, over to you.
Hello, good morning, everybody. Thanks for having me on the webinar. Really appreciate it. While I'm getting the slides up, I appreciate, bookkeeping, finance can be quite dry. So I'll try my utmost to keep you engaged and not drone on too much about certain things. So bear me one moment. Okay, is the screen visible? Fantastic, brilliant. Right, so today we're going to be looking at things from a bookkeeping perspective. You've made it past the first year or two of trading. You've kind of come out of the cave into the light. And here's some of the common pitfalls we're going to discuss today that we get with our clients. So before we go into that, just a brief intro to myself. So my name is Mike. My background is software and automation within accounting. I used to work for Intuit QuickBooks, and I've helped over 8,000 UK businesses migrate to cloud accounting software, as well as 500 accountants. I founded Better Bookkeeping Solutions back in 2021. And this is us in a snapshot, or all I could fit on a slide, really. So we're fully insured, AML supervised, ICO accredited bookkeeping practice. We've got a team across the globe. So I'm here in my humble home office in London, but we've got teams in South Africa and India. And we use all of the leading cloud accounting software. So QuickBooks Online, Xero, Sage Business Cloud, all of the various apps that plug into it. How do we judge ourselves? We judge ourselves by the number of clients we have, how quickly we respond to them, and the number of late VAT returns and VAT fines they get when investigations pop up. So now I've introduced myself a bit and the business. So today I want to talk about three things. And this is the image that I think captures what happens after we go through that stage of starting up a business. I remember the sleepless nights, putting, all my life savings into getting the business going, taking that step into the unknown. And then after the first year, for us, we're quite lucky, we got through that. And after looking at ourselves, speaking to our clients, the three things I'd like to discuss today is really some of the how to read, a profit and loss report, and some of the common challenges for scale-up businesses with their chart of accounts, how to avoid some VAT pitfalls, maximize your VAT claims while staying compliant. And then just a few bits on software. We're going to focus on expense and bill management, which seems to have the biggest impact with our customers. So to dive straight into it, how do we look at a profit and loss report? So if you go into any accounting software, you're going to have a profit and loss report. It's the first one you look at. What it is, it's your income and expenditure, and it's broken down into these 4 or 5 headings. So you've got your income, which is all of your money in, your sales. You've got your cost of sales, which is an expense, which relates to things that you buy that are specifically related to that income coming in. And then you've got your expenses, which is everything else. So, coffee for the office, telephone, internet, etc. So the way that we should be planning as business owners at this stage is we should be looking at things as percentages. And very, very briefly, if income is 100%, after your cost of sales, what are you left with? Well, in this instance, cost of sales is £30. So I'm left with £70 after. That's my gross profit. And then we take out everything else, expenses, which is 20%. And then you can see what your net profit is, which is right at the bottom before tax. And that's what you're left with. So always have a plan in terms of what percentage you want your cost of sales to be of your income, what you want your expenses to be of your income. And if you can work to those plans, it really helps you scale up faster because there's no unexpected surprises. So I hate to do this to you guys, but I am going to jump into Excel just to show you another pitfall. Hopefully you can still see the Excel screen, Sally. Brilliant. Fantastic. So what I've got here is just some dummy data. So this is a profit and loss of what we've just discussed. You've got your turnover, which is your income, cost of sales, administrative costs, which is what Xero likes to call it. This is from a dummy Xero account, but it's the same information. I've put it in the captions here just for reference of what percentage it is for the planning. So some of the common pitfalls that we experience is the chart of accounts get messy, right? So you can see here, we've got two for classes, which are the same. Other revenue, maybe the bookkeeping's been done by the owner or freelance bookkeeper. The VAT deadline's tough and they're just shoving stuff they don't know how to categorize into other revenue. Cost of sales, again, we've got a few duplicates, trainer payouts, trainer payments. Consulting, again, another category that things are just bunged into. So this is quite common. What happens is these accounts just get created, they get duplicated, and then business owners don't look at it. So it doesn't really make any sense to them. So what is a good opportunity to do is to streamline the chart of accounts. So we've gone here from about 65 headings to about 40. So we've cut a third of these accounts on. We've basically merged them together. We've streamlined it. So now a business owner will look at that and think, right, I know exactly what's in classes. I know exactly what's in franchise one. Our cost of sales is just three things. We don't need that convoluted row of things. And the most important thing here is that this report makes sense to you. And when you look at it, you know exactly what percentages you're going for in terms of your targets, and also what types of transactions, customers or suppliers are in each of these headings. So that is that bit. Hopefully I didn't bore you too much with the Excel there. So mindful of time, sorry if I'm speaking quite quickly, but now I just want to go on to some of the common VAT pitfalls. So we've been through a lot of random VAT investigations. Some things, types of receipts you cannot claim VAT on. So for example, if you go to a restaurant as an example and you get a till receipt, you cannot claim VAT on that. It's not a proper receipt. It's from the card machine, and what you need is the till receipt that accompanies it. Same with Amazon. So order confirmations is not going to fly if HMRC want to look at proof and evidence of what you've claimed VAT on. So be mindful of that. Other examples include, suppliers that aren't registered for VAT, obviously don't put VAT on that as well. So on the flip side, what can be used to claim VAT? Well, here are three different examples. We've got the till receipt, which we discussed earlier, which is the thing that you get with the card receipt, the receipt from the card machine. We've got a proper invoice where the VAT's clearly laid out as a line item. And then we've got another type of receipt where, although there's no VAT as a line item, the VAT number is actually on the receipt. So these can be used to claim VAT, and VAT should not be claimed if there's no mention of VAT or it's an order confirmation like we've mentioned before. So This is a bit more advanced. So the rules on business expenses as set by HMRC are you can claim tax relief, whether it's VAT, corporation tax, if the expense is wholly, exclusively, and necessary for the business. So this opens up a huge area of interpretation. But to simplify things, I've put it in these sections. So number one is entertainment. So under no circumstances, if you buy alcohol for your clients, for your team, unless perhaps it's a budget for a Christmas party, can you claim tax relief on alcohol? So that includes taking clients out for meals, taking teams out for meals, where there's alcohol, or even the meal, because the purpose of that meal is more of a jolly rather than a business expense. But what can you claim VAT on? Well, subsistence. So if you're out of your usual place of work, there's an allowance for food. Accommodation, there's an allowance for food. This is all on the HMRC website on one page. Travel, as long as it's within the limits of HMRC guidelines. Obviously, the likes of TfL are never going to have VAT on them, but it is a business expense that you can get tax relief on at the end of the year. And then we've got two new areas. So team refreshments. So if you were to have a meeting in your office and the purpose and focus of that meeting was to learn or to have something to do with the business rather than a jolly, and you wanted to order in maybe some food or a sandwich pack from Marks and Spencer's, you can absolutely claim the VAT on that. So that is very different from entertainment. It's a business meeting. The purpose of the meeting is business, and you're bringing in food as refreshments. And it's the same with clients as well. If you bring clients in to your premises, or indeed if you rent a premises and the purpose of the meeting is to discuss business, then you can claim VAT on refreshments as well. So not many people know about these two. And if you are a business that does this, then yeah, absolutely, it's worth doing, and make sure you maximize your VAT claim in a compliant way. And then moving on to the last three. So we work with over 32 different app companies at the moment. There's three apps that I want to just talk you through today. They all focus on expenses management. What is that? That is a paper receipt. That is a digital bill invoice that somebody emails you. So if you have more than 30 receipts and bills each month, have a look into these free softwares. They're very similar, but they do different things. So the first is Dex. So Dex will plug into Xero and QuickBooks. It's a very easy way for one of your team members or you as a director to take a picture of a receipt with an app on your phone. You can have an email address to forward in receipts and bills as well, and that all connects into your cloud accounting software. So you have the attachment of the receipt there. Pleo works in a very similar way. However, it's the same technology, but you get a pre-paid card. So if you're currently giving your employees your business bank account card to go and get some milk, that's not best practice. It's better to get something like a Pleo card, which is a prepaid card. It has the same functionality to take pictures of receipts for the team members. It integrates with the cloud software. And then last but not least, you have Apron. So Apron is a fairly new kid on the block. Again, uses very similar technology to Dex and Pleo, but this is designed for bulk payments. So if you have 50 suppliers to pay, or freelancers to pay, or you have a lot of people on your payroll, Apron will automate that bank payment process. It will connect your bills and receipts with your online bank, prepare the bank payment form, and you touch of a button, when it's all set up correctly, you can pay everybody in one go. So it's a time-saving tool there. So these three apps that plug into the leading cloud software, worth looking into. They have different purposes. We have some clients that use all three. It's very rare. But if you've got a lot of employees with out-of-pocket expenses, it's Pleo. If you don't have that but head office costs, it's Dex. If you have to make a lot of payments, it's Apron. So just to recap of what we've gone through today, I appreciate time's of the essence. So first and foremost is know your margins. Know when you look at a profit and loss report that income is 100%, what is in cost of sales and what percentage of that is your income, what is in all your other expenses and what percentage of that is in your income. If you work towards those goals and you have confidence at looking at your profit and loss report and knowing what's in there, it's really going to help you keep your margins and scale up effectively. Don't get caught out with VAT. So what types of receipts and bills can we use to claim VAT? What can't we use to claim VAT? Where are the kind of murkier areas to navigate? Things like the difference between entertainment and refreshments, for example. And then, use the right apps based on your business, how it works, to save you time, reduce the risk of giving employees your bank account, and make sure your receipts are kept in your cloud accounting software. So that's all from me today. Thank you, and I'm happy to take any questions.
Thank you very much, Mike. I think we'll do questions at the end. After everybody's spoken. I have got a few for you, but as I say, we'll keep those to the end. Thank you very much. If you could stop screen sharing, that's great. Right, next up we have is Buki Braithwaite from Bukmos Services, and you're going to be talking about budgeting and cash flow. And we have already received a question when people registered talking about cash flow. So over to you, Buki.
Hello. Hi. Thank you, Sally. Hi, everyone. Good morning. Welcome to this webinar. And thank you to the West London Chambers of Commerce for allowing me to come and talk about a topic that I'm really passionate about, which is budgeting and cash flow management. So my name is Buki Braithwaite, and I'm the principal accountant at Bukmos Services. Sorry, I'm supposed to be sharing my screen. Just 1 second. Okay. Can you see it? Okay, great. Yeah, so that's just a brief introduction about who I am. I'm the principal accountant at Bukmos Services Limited. What do? We focus on empowering business owners to make sustainable decisions, business decisions, by providing them with simple yet effective and efficient management accounting solutions. It's a new business, it's a new practice, but personally, I have a lot of experience in corporates. I've worked at BP, British Gas, WH Smith, very large organizations where I've done a lot of financial planning and analysis work. So there's so much to share, but in the interest of time, I'm not going to be able to go through everything. I saw this quote and I thought this was so appropriate. The 3 most important things you need to measure in a business are customer satisfaction, employee satisfaction, and cash flow. And this is so true. The reason is cash flow is the lifeblood of every business, especially for SMEs. It's like petrol in your car. If you don't have petrol in the car, it's not going anywhere. It's, your cash flow is your money coming in and going out. And it's always best to have positive cash flow in the business, because even the most brilliant ideas will fail if you don't have any cash to support it. Poor cash flow is also the leading cause of business failure. So, we need to get into the habit, and, we encourage clients to get into the habit of regular budgeting. So you're in a better position to identify potential cash shortages. And this will enable you to plan proactively and make informed decisions. So again, why does this matter? Why is cash flow important for SMEs? The reason is most SMEs have limited financial buffers compared to large organizations. So having that cash flow is critical to keeping your doors open. You know, without sufficient cash flow, you can go bankrupt, and that's a reality. It's not a farce. It's real. We need the money to be able to do anything. Also, it helps you to avoid financial crisis. So when you manage your cash flow well, you can ensure there's enough cash to meet your daily operational needs. So what I want to do is I want to share 10 top tips that would help you to manage your cash flow a lot better, or just give you an insight into what you need to do to make sure you're always cash ready, or the business is cash ready. So the first thing is you need to establish very clear business goals and set financial objectives. What does this mean? It's about what exactly is it you're trying to do for the business. You have to be very clear about this. Are you trying to increase revenue, or are you trying to to expand, to scale up? What is it you're trying to do? Once you understand what your business goals are, whether it's I want to reach more customers, or I want to stay as we are, but we want revenue, profits to increase, then that helps you with planning the next stage, which is creating a realistic budget. You can only budget for what your business can cope with. So part of the budget would be identifying, how much income you can make, how much what your expenses are. In some cases you would have like a year before, but if you're a startup, you can still create a budget for what you think the expenses for the current year is going to be, and what you think where you think the income is going to come from. And then as you go along, you start to compare your actuals to your budget, and then the variance would help you to understand where the gaps are and what you're not doing and what you need um, to do, to close those gaps. And if you find on a regular basis those gaps not being closed, then again it's best to go back to the drawing board and understand whether your business goals are realistic, or whether your financial objectives are being met. And then once you do your budget, you create a detailed cash flow forecast. Now, your cash flow, again, your cash flow is about where's the money coming in? What are we going to spend over the next few months? Do we have enough money in the bank to, to spend when those bills come? Now, it's important to plan. Planning is key to success in your business. So when you have that cash flow forecast and you're able to determine where the shortfalls are, you can now make changes or make amendments to close those gaps. And that's what it's all about. Your cash flow forecast just gives you a view for the future. It's not about having a positive bank balance or having your bank in credit, because that is at that point in time. It's if the following month you have a tax bill to pay, or your machine breaks down, or some inevitable happens, if you haven't got the cash in the bank to fund that activity, then it's not, you're just going to be you know it's not going to work. So the next stage is managing your receivables efficiently. Your receivables is your money coming in. That's the inflow into the company. And it's working with your customers, making sure that your customers are invoiced on time and promptly, making sure that if you suspect that there's a delay in payments coming in, you have a strategy to work with your customer to make sure you're getting these payments on time. Encourage them to set up standing orders or direct debits, it's where possible. Offer discounts if you can, to get them to pay on time, and also have like an invoice system where once you've agreed on the work that needs to be done, the invoices are going out, at the time when they're supposed to go out, and you're matching your invoices to, the purchase order. So it's not like you have invoices outstanding to be sent to the customer, which is your money just sitting, not doing anything. You need to get into a good plan for how you're sending your invoices to your clients and how they're paying you. And for new clients, you just have stricter due diligence that you need to do to make sure that they are customers who will pay you on time and who will not create bad debt for you. And saying that, you also need to manage your payables effectively, and this is what you pay to your suppliers. So agree good terms with your suppliers. Um, if they offer you a discount if you pay on time, then take advantage of that, because that is money, um, you know, free money to you in some way, less money and less overheads. So work with your suppliers, maintain very good relationships with your suppliers is what I would say. And the next thing is to monitor your expenses regularly. Your expenses can get way out of control if you don't keep an eye on them. Curb, unnecessary spending. If you don't need to get to buy, some stationery in the business, then don't buy it. Wait until the following month. And your cash flow should help you to, your cash flow statement or your cash flow forecast should see where you can cut costs when, for example, you haven't got paid for an invoice that you've sent out. You can easily track where you need to make those adjustments. So it's really important that you monitor your expenses regularly. And the next point is really important. I know I've kept it late on the list, but it's really important. And this is your core cash targets. What this is this is the money that you need in your business to keep the lights on every single month. It's a simple formula, and the formula is you have 2 months in reserve, 2 months of all your total overheads um, in a pot, as well as all your taxes that need to be paid. So your taxes would be your income tax, your VAT, if you're VAT registered, your corporation tax, your PAYE and NI, um, you know, deductions that you need to make. Make sure you have a pot for those 2 months of expenses, overheads, and your tax liabilities that you need to pay. It's important you have that because the tax bill can come upon you very quickly. I know HMRC, and this is where I move into the next point. I know HMRC would, in most cases, request that you pay on account, which is for the current year, you're paying a portion, or 50% actually, 50% at the same time you pay your tax for previous year, and 50% 6 months later. Now, if you've had a really good year and you've got more profits, then it's likely that your tax bill is going to be higher. So take this into account. Make sure you've got enough in that fund, in your target, to cover all your tax bills, because that's not something you want to come upon you and surprise you. So always make sure you put money aside. If possible, create a separate account where you're putting money in for your taxes, so there are no surprises at all. And work with your accountant, speak to your accountant about how you can plan for these unexpected expenses, how you can plan for your taxes. They should be able to give you a view if they're monitoring your accounts regularly. They should be able to give you a view of what your expected tax liability is going to be, both for corporation tax and for income tax. And then build an emergency fund. An emergency fund is where you have 3 to 6 months of your expenses to one side. So if anything happens, at least you've got 3 to 6 months. If your customer goes out of business and your major customer goes out of business, at least you have 3 to 6 months of expenses that you can, draw from to keep the lights on. And it's really important that you have that. It's very difficult when you've got a lot of expenses and the money's not coming in as much or as quickly as you thought it would be, but you can save a little bit at a time to build that fund. And lastly, I know a lot of businesses want to focus on what they do best, which is, just what they've set up their business to do. Sometimes you're dependent on, a friend, giving you advice, but my suggestion is to seek professional advice. As Mike mentioned, go for someone who is AML regulated. Mike is AML regulated by HMRC. I am AML regulated by my professional accountancy body, which is SEMA. So seek professional advice. Make sure, you've got the statistics to show that they can give you the right, you can work with them very well. And that's what I would say. Just make sure that you're working with the right person. You're asking your accountant the right questions. Don't see your accountant just once a year. See your accountant as often as possible. So thank you. Thanks for listening. And my contact details are on the screen. We take questions at the end, as Sally mentioned. Thank you.
Thank you very much indeed, Buki. I'm aware of time. The next speaker is Hitesh Kanadia from Modern Finance Solutions. And I think this one is quite interesting, helping source finance. That is the biggest question we get. Where do I get some money from? Hitesh, over to you, please.
Good morning, everybody. Good morning, Sally. Thank you to West London Chambers for having me today. Very excited to share my knowledge with everyone on this webinar. My name is Hitesh Kanadia. I am the director at Modern Finance Solutions. We're a broker, we're a finance broker, and we're based locally in Hounslow. And we help a lot of local businesses to access finance where they've otherwise been found very, very challenging. So let me start sharing my screen first of all. And hopefully, I hope it's not going to be too boring. Okay, share. Right, can you see my screen, everyone?
Yes, but I can't. Yes, it's come up now. Brilliant.
Okay, lovely, thank you. Right, so as mentioned, so my name is Hitesh Kanadia at Modern Finance Solutions. I'm the director here. I've been running this brokerage for the last 10 years. And obviously during the time, come across a lot of different types of businesses and face different challenges on how to help our clients to access finance in the best possible way. So a little bit about me, about us, really. What do we do? We're a professionally qualified finance broker, based locally, 8 years now. It's going on to 10 years now. We are authorized by the FCA, which is the Financial Conduct Authority. So we are a professional broker, providing a full range of funding options. So that can be from any sector, any need, whether it's equipment finance, vehicles, business finance. We've got a huge range of different options available, and along with that, we've got a great choice of lenders. So we work with most high street banks directly. We're authorized directly, so we don't have to go through a third party. We'll approach a high street bank or a specialist lender, depending on the customer circumstances. And also, we are a member of the National Association of Commercial Finance Brokers, which would give our clients a bit of confidence that they're dealing with somebody who's professional. We get audited, and our service is, got to be absolutely 5-star. Our sort of main ethos is to give, customers the best service at the best value. Can I just mention at this point, as a broker, we don't charge any fees. So our service is absolutely free of charge because we get paid by the lender. So, whether you want to, pick up the phone and ask me for any guidance or advice, or you want to, apply for any type of finance, we don't charge any fees. So all I can give you is my experience and my expertise. So that's a little bit about me. Moving on, what kind of finance do we access? So here's just a few funding options that we can help our clients with. As you can see, it's a pretty big range, and it's very diverse. It's from somebody who might be exporting or doing trade finance. So there are, again, where would you go and find the best finance, and which lender would you go to if you didn't know what your needs were? So, for example, if you're buying stock and you find out that obviously by the time you've bought something, and by the time you've sold it, you might have a gap of 90 days, 120 days by the time you raise your invoice to the time you get paid. Now you've got a gap of 90 days, 120 days, 60 days, whatever it may be, depending on your terms to your customers. But that completely affects your cash flow. So we have a specialist revolving credit facility to help you overcome that challenge on your cash flow. And so that's just one option. Again, if you're looking to grow your business, and you want a contract, or you've got lots of customers where you need to buy equipment or vehicles, we then have to go and approach a specialist lender that deals in that sector only. So we wouldn't go to a bank for all of these funding needs. We would have to go to separate lenders who specialize in each category. Now, if you're personally not aware of where to go, what we normally find is that a lot of businesses get finance declined because they've either gone to the wrong lender or they don't meet the criteria. So just something for you to bear in mind. There are a lot of options available here, and I know it can be quite mind-boggling, but pick up the phone if you need any help or advice, and hopefully I'll guide you through it. So again, moving down the line. Commercial property. So if you're currently leasing anything, leasing a shop or a unit or something, and you think, hang on a minute, I've been in business for 4 or 5 years, I think it's time to buy the freehold. Again, we help with your commercial mortgage, and so on. So you can see what types of finance we do. We help with any need on your finance, as long as it's for your business purpose, whether you're buying a vehicle or employing staff or need your bills paid in time. There's a huge diversity of options available. So again, I'm not going to bore you too much, but this is just really an introductory slide just to show you what's available out there. Next slide. Okay, just some interesting stats from our lenders. Again, this is what we see on a daily basis. Did you know that around just over 70% of applications are declined as the business owner didn't meet the lending criteria? And again, I'll just go back to the point where someone might have applied for a loan. They've gone to NatWest Bank and they say, like, we need XYZ finance for this particular reason. And the bank will simply turn around and say, well, hang on a minute, that's not our specialty, that's not what we do. Now, if you've put an application in, it gets declined, what do? Then you go to a second lender, third lender, fourth lender, and your credit status starts getting poorer and poorer. And then when other lenders see that you've been to a couple of lenders already, it wouldn't reflect very nicely on your credit status. So it's best to check which lender you want to go to, for what sector, for what need. Again, 56% of SMEs were deemed too risky. So risky meaning, have they paid their VAT on time? Have they got enough cash in the bank? Are they 2 or 3 months away from their cash flow emergency fund? Lots of things affect it. And the last one, 44% of SMEs have an unsuitable financial history. Again, have their accounts been filed? Is everything up to date? Are there any late payments? Have they got any CCJs? Have they got any defaults or anything like that? So lots of things that we as a broker have to check before we go and approach the right lender. So as we say, we help you match with the right lender. That's our job as a specialist. Next slide. So some of the challenge that we find, again, going back to it, is, look, what happens if you're, if you've gone to a lender and you get rejected? What other information are lenders demanding from you? And what supporting information can you provide? Have you got a, if you're going to apply for a large loan, do you have anything to support that application? Have you got a business plan done? Do you have a cash flow and profit forecast? How is the business performing currently? And the majority of applications are declined because we find that if the accounts and the information you've provided does not support the servicing of the loan, then simply it's not going to work. For example, if you apply for finance, the first thing the bank's going to ask you is, hang on a minute, how are you going to pay us back? And within your cash flow forecast, if you apply for a loan which costs you £3,000 a month, but you're only making £2,000 profit, clearly that's not going to work, because you're going to start going into arrears. So yeah, lots of things to consider, and these are just some of the challenges that we see on behalf of our clients, which again, we support and guide you from start to finish all the way. Next slide. What difference can we make? So you've gone to 2 or 3 different lenders. You've wasted a lot of time. You've gone from lender A to lender B, lender 3. You've done your Google searches. You've rung up, phone a friend, and you're asking for recommendations. What difference can we make? Well, first of all, we use a structured and successful approach. So we see a business's full financial forecast. We see all the information that we need. We collate all the information from you to make sure, before we present it to a lender, is it, does it qualify? Have we got everything in place for a lender to say yes? We know what questions to ask. We understand the process, and we do a really comprehensive fact find. What are your circumstances? What are your needs around the finance, and how are we going to service it? How can we present this to a lender where the lender will say, I like this. Yes, okay, it's affordable, it's doable, and here are the terms that we can provide to you. The difference we make is that we save you time and money because of our expertise and our experience. We prepare and we package your deal to present to a lender. And again, just to reiterate, we've not charged you anything at all, because we get paid by the lender anyway. But we've managed to help so many businesses where they've been declined elsewhere. We've managed to place a deal somewhere else with another lender and successfully arrange funding. So yeah, just to show you what difference a broker can make. So obviously we save you time and money. We get you to find you your best deal. One of the things that we come across very, very commonly is that business owners, when they need just a general business finance, so many of my clients sometimes sort of think, oh, hang on a minute, I've done a Google search, I'll go to Funding Circle, bang, they've applied for a 50 grand loan. Funding Circles come back to me and say, we can only give you 20 grand. And it's at a very, very high interest rate. If you're talking about 15, 16, 17% rates. We've managed to switch those customers over to a high street bank for around 30% less on interest. Can you see the difference we can make on saving you rates and getting you a better deal? So yeah, a lot of sort of knowledge comes into it, and of course, when we present our case to a lender, they know that it's come from a reputable broker. It makes the difference between getting rejected and getting approved. Just an example of a couple of deals we've done. Example one, our customer needed, of course, they're a drinks wholesale export, £7 million turnover, needed £250,000 for stock funding, went through the local bank, got declined. They went to another broker, and their broker said, oh, why don't we give you a bridging loan on your home? So imagine being misguided to take finance out on your personal property for your business. Anyway, they were recommended to me. We managed to get them the £250,000 fully for their facility with the 80% government guarantee scheme. And again, it makes a huge difference between them, not being successful or growing the business. Example number two, food distributor. This is a good one. Again, cash flow. Completely different need this time. Obviously they buy lots of stock. They've £8 million sales, so they've got millions of pounds that they do purchasing of every month. They've got 600, 700, 800,000 pounds going out to purchase huge stocks to then supply to the customers, which takes them around 120 days to get paid, when that would really affect their cash flow. Having that kind of a balance of cash over 2 or 3 months not being paid can completely jeopardize your business. So how did we help them? This is a completely different facility. So we managed to get them an interest-only revolving credit facility, and they can draw down on any money they want. It's on tap. They only pay interest when they use the money, and they obviously give the pay the money back and not pay any interest. So it's a great facility. Last example, asset finance. We've had a business locally around Heathrow, trying to upgrade their vehicles. They want US compliant. They do scaffolding, and they've gone to the local bank, and they've gone to a dealer to buy a number of trucks, which cost them £200,000, which is actually 3 trucks. And the bank only said, "Oh, we can't do all of them. We can probably just do one," and the rates were high. But we know which lenders to approach, and we got them approved for obviously the full amount, for a better rate and a better deal. So there you go, just a diverse range of products. Here's my details, and obviously I'm very happy to share them with you afterwards. And I'll also send you our presentation. If you need them, just let me know. But my contact details are here. Happy to help anybody. Hope it wasn't too boring. And
no, that's lovely. Thank you very much indeed, Hitesh. I think the answer is always go to a broker. Thank you. Right, we have one last presentation from Arora from Nanak Accountants, talking about tax for family managed businesses. Bal, over to you, please.
Hello. Yeah. So can you see me now? Yeah. Can you hear me? Okay. So first of all, many thanks to West London Chamber of Commerce, Sally, Ellen. What a beautiful soul. You have given me chance to speak here and share my knowledge. And to be honest, after listening to Mike from the Better Bookkeeping, the points he has made, because as an accountancy practitioner, I can understand that there are a lot of general public, they are not aware that where to claim the VAT on which invoice. So for the new businesses, it is very important to understand the basic concept. And the Buki, as she said about the cash flow, that it is very important. It is all about the planning, that how we plan our business and start our journey with the business. So it was amazing with the Hitesh, as he said, that in a modern finance company, as he's serving to the clients, it is a practical experience with me. One of my client, he took a loan with the funding circle, and he was paying very high amount of interest. And then when he switched to the high street lender, he saved a lot of money. So I'm glad that Hitesh is providing the same services. So in the Nanak accountancy, we provide the services to SME companies. So most of our clients are real estate investors, property developers, professional services, architects, QS, as well as the landlords. So mostly problem when anybody is going to start the business, what they are suffering, that at the initial stage, they basically don't know where this structure need to be started. So they need to be registered as a sole trader, as a partnership, or as a limited company. So we are focusing with the startup challenges, and we are just trying to support them. That initially is depend, if for example, if they say individual person and they are a self-employed, how can they grow towards to the limited company? What is difference between the sole trader and limited company? As if they are a sole trader, obviously they have to pay the basic tax, and if their income will go above 50 grand, they have to pay the higher tax, which goes to the 40%. Then in that point, they should switch to the limited company, where they will be paying the less corporation tax, which is 19% up to 50 grand, and up to 50 grand there is 25%. So as well as they can structure their company business as well. They can give a shareholding to their company. So basically the family owned businesses are the enterprises where the founding family has significant control and influence over the company's operations and their regular decisions. So limited companies, opting for a limited company is better for them, because it provide them the benefits such as a limited liability protection. So which means they personally, their assets are protected for the business debts. So they are not the solely responsible for paying their debts if they are not a limited company. Limited companies are taxed on the profits on the corporation tax rate, not on the personal tax rate, which can be advantage compared to the individual income tax rates. And as well as the tax benefit for the disturbing profit, family businesses can tailor how they distribute the profits. So they can be the shareholders. For example, if they are as SME companies and they is a family owned businesses, so if for example the husband is 100% shareholder, at some stage where their profit will go higher, and if they withdraw a lot of dividends, for example, if their salary and their dividends are other incomes, for example the rental income, if it is goes above 50 grand, they have to pay the higher tax amount of tax. So they can do the tax planning, they can divide the shareholding between the husband and spouse, and both can be the partner in the business, and then they can control the higher rate. So that's how they can manage, as well as if their kids can grow, they can be part of the shareholding of the trading companies. So family businesses can tailor where, how can they distribute the profit, distribution of the profit, they can withdraw the dividends. Family members who are the shareholders can receive dividends which are taxed at lower rates compared to the salary income, as well as shareholders loan. Family loans can help mitigate tax burdens, provide them the legal guidelines. So obviously, as they have to speak to their financial advisors, their accountants, to take the proper guidance. I'm very glad that I think Buki has shared this point, that the normally the people, they see their accountants, their advisor end of the year when they have to do their tax returns, but they don't make regular appointments with them. They are here to help them. So here in the Nanak accountant, we continuously approach our client, and we arrange the meetings with them on the quarterly basis. So we don't wait until the year end. So we request them to come to our office and arrange the interim meeting with us. Sometime it is better for to do the tax planning and for the future planning how their business is are going. So for example, if any business they have set up a new company, okay, as you know, the threshold of the VAT is now 90 grand, okay. So sometime if their business are growing, and if they are not looking at the control on it, after the some point, after a year, when they will bring their books to the accountant, then accountant will realize this customer, this client need to be registered for VAT because they have crossed their turnover about 90,000. So on that point, it will be too late sometime, and HMRC will send the penalty to the client as well. So it is better that clients need to be sit with their accountants on the quarterly basis and review the bank statements and sales with them to make sure at some point where they have reached the VAT limit, they should register for the VAT on the same time. And sometime people doesn't know that they also can register for the flat rate scheme, because I came across people only understand that okay, they have only standard rated VAT scheme where they can apply. But after looking at the business circumstances, they have to sit with their accountants, where the accountant can analyze that which VAT is beneficial for them. Is it flat rate VAT, or there is a standard rate? So if the value of the input is higher, then maybe it's the standard rate. So obviously this is depend on the circumstances of individual. So they every business have their own different circumstances on. And as far as personal allowances on the family businesses, people can hire the family members, and they can offer them a job and they can work with them, and up to the 12,570 every person get the personal allowance obviously. But as far as they are getting the personal allowance, they are also saving the corporation tax as well. And there is also a dividend allowance. Family members can receive a certain amount of dividend allowance tax year each year. Another benefit of the family business is entrepreneur relief, which is now called a business asset disposal relief. When selling the business or shares in the business, qualifying shareholders may benefit from the reduced tax on the capital gains and effectively lowering their tax liability. But this is all depend on their circumstances as well as the inheritance tax benefit as well. Family businesses can claim business property relief to reduce the impact of the inheritance tax on business assets, potentially allowing them for a tax exemption, which obviously depend on the situation of the each asset, each category. There are certain rules involved in this, as well as on the family businesses. People can contribute towards the pension schemes. Family members can make a tax deductible contribution to the pension schemes, effectively reducing the tax profits while providing the retirement. A part of this on the family businesses, people can use the research and development R&D tax credit. Family businesses engaged in R&D may qualify for relief, but for the innovation. But this is depend what sort of business are they. If they are following in this category, not everyone is eligible this sort of benefits. But obviously they can also have the group relief, but this is all dependent on the circumstances of the businesses. As well as I said before, that our clients are mostly based on the property businesses, and they obviously sometime when they are growing up the business, from their trading income, sometimes they get a large amount of profits. Obviously the individuals in a family businesses, they are withdrawing the dividends, okay, as well as they withdraw the salary every month. But there is a lot of extra funds which are available in the trading limited company. So now most of the clients, they want to invest these funds into a properties, but there are a different way. They can withdraw the dividends, they can pay the tax on dividends up to basic rate and the higher rate, and again they can invest in the properties. But now, as finance cost cannot be claimable as a deductible expense, so on this point mostly accountants recommend as a limited company or SPV companies to set up. So one limited company, obviously if they have a same shareholders director, they can give loan to another dividend limited company where they can purchase a property, and then they don't need to pay the dividend tax. But somehow if the trading business suffers, then on that point creditors will come back to the trading company, and then the client may have to sell the property on the other investment company. So sometimes this is not a better option as well. The better option is to keep the holding company. So there will be a sorry, I don't have any chart of that. Next time I'll try to explain this. It is the best structure to have a holding company. So holding company owns the shares on the trading company and investment company, and the shareholder will be the holding company, will be the individual business family members. So when any trading company will make any profit after obviously they will pay the salaries to the directors and other staff members and other family members. After that if they they can withdraw the dividends, and up to a certain stage, if they want to keep their limit up to the basic rate band, and still they have additional funds, extra funds available, which called reserves. These reserves can be transferred to the holding company without paying the dividend tax, and the holding company can invest this company to another, the third subsidiary company, which will be the investment company, and then the people can buy the properties in the investment companies. So this is all depend, but obviously all this structure we in Nanak accountants, we can have a look on the personal circumstances basis. So I suggest that if people can make appointment with us, so we can explain in brief. And obviously, if anybody have their own accountant, tax consultants, they can reach out to them, and they must need to make sure that all of this structure. I'm glad that you hold this webinar today, because only the accountants the advice won't be the helpful. This will be the helpful with the help of the tax advisor, with the help of the bookkeepers, with the help of the financial planners, with the help of the financial consultant, financial advisor, mortgage broker.
Yes.
With that's how somehow there is a culture now where the people want to grow the businesses, but obviously they cannot hire the full-time CFO in the businesses. If any growing company is hiring the CFO, the minimum salary is about 150 to 200K. So the growing company cannot afford this salary. So now the structure came in the market where people are, where the experienced professionals, they are offering the fractional CFO services. Like we provide, this is a separate venture in our business, Nanak Accountants, where we provide the CFO services to the, which is a financial controller services to the growing companies. So
Yes.
we have to decide, as well as we are their accountants. There is a separate venture where we can advise with the to them with on daily routine services. For example, most of the clients we hold are the real estate businesses. So now a problem with the real estate business is when the people acquire the business, and for example, any property developer client, if they acquire any site to develop, they don't know which planning permission we need for it. So as
So
a
this is another
services,
service that
yeah,
you offer.
we connect them
Yeah.
to the right architects.
Lovely.
And
Thank you
then-
very much indeed, Bal. I'm just
Yeah.
aware of time because we've sort of
Yeah.
run over. So thank you very much. I think one thing I've come away with from today is you need professional advice.
Exactly.
Alan is now on screen. I'm sure, Alan, you've got some questions, but yeah, so please.
Okay, thank you very much, Sally. And first of all, thank you, Sally, for putting together a really good panelist group of people that are going to properly help SMEs. A combination of accountants with an element of finance from Hitesh is exactly what people need in today's more cash-strapped economy than what we've got, especially if they want to have a business plan to go forward. I've got a couple of questions, first of all, but more than anything else, I wanted to comment on Mike's presentation about understanding your cost allocations. And one of the things that's come out with Heathrow Airport, for example, is when you put in a bid for a big job, you need to make sure that all of your costs are properly calculated in what your sales price is going to be. So your costs for understanding and putting forward what your carbon footprint impact is. And also what your cost of finance is going to be to actually buy your products to supply your goods. And ultimately, you've talked a bit about funding circle costs. I know they've got lovely adverts, but oh my word, their prices, when you actually get down to it, like 25% interest a year. And it makes people's eyeballs pop out. So come along, my only comment is come along and talk to your chamber, and we can recommend some really good accountancy people, some really good financiers. I can personally recommend you, Hitesh, because you actually helped people with their export finance from our chamber. I've got to go at 11:05, and guess what time it is? So I'm handing it back to you, Sally, to ask the question.
Okay.
Have a great day. Thank you very much for your wonderful presentation.
Thank you.
Thank you. Okay.
Thanks,
I think
Alan.
most of I think most of the questions, I think that Killen has put some questions. I think Buki's gone back to him about accountancy software. So I think we are now 11:05. I think we will draw it to a close. As I say, this will be on our YouTube channel, the recording. Thank you very much for all your input. And as I'm just going to repeat myself, I think, you know, my biggest takeaway from this morning is we all need professional advice. And that there is, you know, often a cost involved, but it's well worth it. Thank you very much indeed for your time, and have a good rest of the day, and have a good weekend. Thank you.
Thank you. Thank you.
Take care.
Thank you.
Bye-bye.
Yeah.
Bye.
Bye.